Hello everyone, welcome back to Cryptosmart Analyst. So today I'm just going to be elaborating more on the previous video. So if you've not seen the previous video where I explained how I use STIC daily for scalp trading, you should go watch it. So I got some feedback where someone's saying the video was not elusive enough, so I just thought to elaborate more on it. So I'm going to be doing that today. How I used to. Okay, I mentioned that of not, how we got into not for STIC, how we got into not here. So that was the buy trigger when not flipped bullish. That was in May 25th. When Saturday, May 25th was when not flipped bullish, and we held on it. And since then, it's been bullish till we got here, till we got our extreme alert. So we got an extreme alert here. That was the exit for our knot, and since then knot has been consolidating. So if you're for those, this is basically for those that are doing long-term trading. Like I said, my time frame is currently on 12-hour time frame. You can see here 12-hour time frame. That's what I use for long-term projection mostly. But if I'm doing short term, I go to 15 minutes time frame or 1 hour time frame. Now those are trade alerts for STIC. We're currently using that on the STIC. Is that trade alert basically? So I'm currently on Solana. Let me just explain that. And I've been trading Solana for some days now. So what have I been doing to fix that? How have I been trading it to be profitable? Sometimes take loss, yeah, which is normal. And what's the best route to go about it? So I tend to use regression band mostly so that I can get to identify my support as well as just use it as a tool. So that's actually where that region is actually another block, which I've already pointed out, which is where we are right now. So how do you trade consolidative markets situations? So we have currently we have the take profit. That was the protect. It takes some profit here. So how do I trade this kind of market? What's the best route? So we have the market flip trigger line, that's the purple line. We have the market flip line, that's the yellow line. Then we have the support and resistance line, that's the blue line. So if this get broken, market is coming here. So how do I trade it? How do I place my stop loss? So this is the thing. Let's start from here. Let's do a replay from here. Okay, I'm going to do a replay. I'm going to do a replay from here. So we got a sell. So we got a sell from this sell. Good. So I'm going to do a replay from this sell. So let's see what's going to happen after that. So I'm doing a replay from this sell just to take you back to what has happened back. So we got a sell, and this sell is not being triggered until the candle closed. So this candle closed. This sell is quite late anyway. So the candle closed. The candle is still bearishly valid, and got invalidated here. So let me pause it. So when I place this sell, I place this sell. I'm currently on 1 hour time frame, right? I place this sell. Where will I place my stop loss? So that's where this UBS comes in. So because I'm trading on 1 hour time frame, I'm placing my sell here. So my sell basically opens here. Trading the candle opens here. My stop loss is going to be around here. So that is the where is the peak where you have UBOS. That's like the swing high. So you want to project. But for me, I tend to look out for 2x. So I'm projecting that it's going to come to. So this is about 1.8, but I'm projecting it like 2x, right? 2x of mine. Yes, risk reward ratio 2. So this is about 2. That's going to take us to 1.68 thereabouts. So I have my entry here. My stop loss is actually around here. Now, with STIC, one of the things that STIC would do is that I'm going to be invalidated. That stop has been invalidated with this cross above. Potential trading manually here is being invalidated. This short has been invalidated with the cross above this market flip line. indicating that the market's potentially triggering to flip bullish. And look at the candle that opened after it is a yellow candle, indicating that the potential market fully. So let's just continue with what's going on. So, and what's okay. So playing it, and with that, the market flip kind of flip bullish, going for my stop loss. Then all of a sudden, we're trying to see good. Let me pause here. Okay, this is the current state. Yes. So the market's standing bullish, but I did not get a buy signal. Did I? No, there's no buy signal. Okay, after the buy signal, after the candle closed, there was no buy signal, indicating that the market is yet to actually confirm bullishness. And after that, you can see we tend to be having a yellow candle, and thereafter we had a gray. Then we had a downward liquidity candle, indicating that the market is reversing downward. And if you look at what happened, we get on the next candle we have what is sell 2. This is sell. So then we got a sell signal. So currently we are on short on Solana. So we got a sell, and after getting that sell, you get, and where will you put your stop loss? That means the new order. The order has been validated. So this is the new order. The stop loss is here. So my stop loss, mostly I just put it like 2% above, about 0.5. So my stop loss is actually above this line. You can see this UBOS, that's your stop loss region. So my stop loss is above this region, and my entry is already here, projecting that the market is going downward. And right now, if I'm using the same loss, I'm going to be making 4.23. That's the risk to reward ratio. My risk to reward ratio, then I can probably just adjust to this region, saying, because we have a support and resistance line here, that's the blue line, my target is going to be, my first target is actually support and resistance line, and my second target is the market flip, that's the green line, the market flip, the bullish and bearish market flip line. That's going to be my second target. So that is how you decide how to pick your trade. Mostly, get the buy, you look at what happens, follow through. If you get invalidated, close it. It's best for you to close your losses early than for you to hold it. That's one major thing. But if you want to hold your losses for a longer time, then the best thing is for you to, because you must understand what you can afford to risk, then the best thing is for you to do there's a strategy for that. That's VCA, meaning that, okay, if I'm going to place it, let's say I'm placing a short here and I don't want to get stopped out, right? My second entry is going to be at my stop loss. So let's say I'm projecting this initial short here. So I'm going to be having entry 1 here. I'm going to be having entry 1 here. Let me thicken it a bit. Entry 1 here. And entry 2 here, which was my stop loss, initial stop loss, yes, which this entry 2 here. So in case I just want to do, I don't want to close my losses at L. I don't want to close my loss early. Now note that if I enter here and I close the stop margin, the loss margin is just, let's see, you entered here, you closed there, that's my just 0.28, depending on your lot size anyway. So that's what I get to lose out. And coming here, we have downward liquidity already indicating that the market is going to dump, and we have the stop loss. So from here, I can just enter a short. I have my short currently valid, and you can see we have a white candle indicating the market is bearish. Then we have the downtrend. So that's where it goes. So another important thing to note is the e-buy and the e-sell, extended buy and extended sell. So whenever you get an extended buy, let me go back, I think we got one here. Whenever you get an extended buy, e-buy, is an indication that the market is already getting to an extreme. So whenever you get an extended buy, you want to start protecting your profit, not taking your profit per se, but protecting it. So let's say I'm longing right now because, okay, I got a buy here. This was the buy. So I got the buy here. Then this is my stop loss. So this is it. Let me delete this. So I got a buy here. I got this buy. Then the next thing was an e-buy. Once you get an e-buy, you want to start protecting your profits, indicating that the market potential may like 50 will say may return, may reverse. and might still get extended. So got a buy, then got an e-buy. Okay, so when I got getting an e-buy, I'm going to basically put my stop loss. Again, my initial stop loss was here. My initial stop loss was actually here. Then when I got an e-buy, I'm basically adjusting my stop loss, basically putting my stop loss close to entry, in which my entry is actually here. My entry is around here. So putting my stop loss close to entry, or probably a bit, just a bit, it's best for you to actually start adjusting your profits. If the e-buy is having a better good margin when you're in profit, then you can start adjusting it. Let's say mostly I tend to put a 1% or 2% margin. Okay, 1% to 2%, so about 1% margin. So that's my stop loss is still valid anyway. So it's still actually around my stop loss. So you got my e-buy. So in case the market reverse, just take me out from there or take me out close to entry. But in this case, the market keep going uptrend. So as the market keep going uptrend, you keep adjusting your stop loss. Normally, when this is the first stop loss, the market keep continue going, and it's going. Okay, yeah, continue going, and continue going, and it's going and it's going. And the next thing you want to do is looking at for the next stop loss. You can see we have a U buy, UBS. That is, UBS means upward break of structure. So the upward break of structure is already telling you that there's potential reversal, but the reversal did not hold. So your stop loss is basically shifting from here. Your stop loss is basically shifting from here, and when you got another. Now you know we also have IBOS. IBOS means inverted break of structure. That is downward break of structure. So we got an inverted BOS here. Let me delete this and draw a candle ring. So the next stop loss, my stop loss are shifted from here to here. So if you let's just replay. If I replay live, you see that is what we have. You can see. So we got the breakout. So we got a breakout. We got a breakout here. Good. So you're going to see that we're going to have a high BOS around this region. You can see it forming soon, very soon. It's going to come, I believe. Yeah. So we got this. You can see active high BOS. So that was it. So my stop loss are shifted from here. I'm going to be shifting my stop loss from here to this region to protect my profits. So to this region to protect my profits. So now that I'm in profit, I'm already protecting my profit with the high BOS. This is where my stop loss is. So as the market continues uptrend, and we continue playing, as the market continue uptrend, you can see I got another extreme buy 2, indicating that my stop loss is also shifting from here to this region, protecting it. So I'm moving higher and higher. My stop loss is currently here right now. My stop loss is currently here until I got a protect profit. So when I got a protect profit, my stop loss moved also. My stop loss is going to be moving also towards it. Let's say you're only risking about say 2% or 1% thereabouts. So my stop loss also moves to protect my profit, waiting for it to continue uptrend. Is it going uptrend or not? Waiting for it to continue. Then the market actually continue going uptrend after that. So I'm protected already. You can see I'm not taking this sell. Why am I not taking this sell too? Because the market is there to close. Is there to confirm a flip. There's a market flip to that. Yeah, good. So this was it. So protected here. You can see I'm protected here. The market flipped here. So when the market crosses the market flip trigger line, that is my indication that the market is potentially going to dump. Potentially. So I take my profit. This is where I exit. So I entered here. So that's a margin of about. So you got an entry from here, and you exit that here. That's 4.1%. One lot size, and you projected from there to your exit. That's 5.7. That's about 5x, 5.78x. So if you invest, if you're risking $1,000, you'll be coming out to $5,790. So that's the way it goes. That's That's the projection. That's how to use it. Okay. If you have any question or you don't understand what I just explained, please let me know. That's basically using version 1 and version 2, because version 1, combining version 1 and version 2 right now, I get to know the color, the market sentiment with the color. So right now you can see this is indicating that the market is, I already told you, like, once you start getting blue, that's bullish. But when you start getting gray color, that's an indication that the market is at a 50-50 range. It's potentially going to flip bearish. And if you look at what happened here, you've been getting gray, yellow, gray. Now, the intensity, the volume and sentiment when you get a blue candle is more than when you get a yellow candle. So yellow candle is like, let's say, put it on the scale of 1 to 10. Yellow candle is like the strength of yellow candle is like 7. Bullishness is like 5 to 7. Yeah, between 5 to 7. Why blue is from 7 to 10. While also for bearish mode, the sentiment for white candle is 7 to 10. Why when you get a red is 0 to 5, 0 to 7 thereabout. So that's like the sentiment. So when the intensity and the volume is much more when you have a white candle for bearish or when you have a blue candle for bullish. So that's one of the things you look at. And when you start having a gray candle, that's an indication that the market is already entering a 50-50 range and a potential reversal. Then you want to wait for it to reverse, and you just short it along the way. The STIC portfolio manager works same way. Actually, that's the way it works. That's one of the things it maps and follow through. So you get a buy, you follow through. You get a sell, you get a downward liquidity. You want, once you get a downward liquidity after a buy, it's an indication that the market is basically going to reverse. And like now, if I'm not using STIC version 1, I might be blinded to, okay, right now I might be blinded to what is potentially going to happen. Like, okay, green, it has broken. It's looking like it's going to be bullish, but I got a downward liquidity. But will it go down or will it go? Because downward liquidity can also change again. So looking at the color sentiment, looking at version 1 sentiment, I tend to see that, okay, the market is actually still in the P50. We got a bullish candle, which is yellow. Then the next one is a gray candle, indicating that potential bearishness. Then we got a sell on the next yellow gray candle. Sell, so, and you can see the market is going downward following it. So that is basically how to use STIC version 1 and version 2 together. And if you're scalp trading, you can also do it like that. You can do it on any time frame. Actually, it works that way. So that's it. If you finish what's going on, I think initially I said the market is going to dump here. So let's see. Let me exit the mode. What's currently happening in the market at the moment? Awesome. You can see we're already short from here, and we're projecting. These are our first targets. From here we start protecting our profit, not taking profit but protecting it. Then this is the major target, 168.7. So just wait for it to break. It has broken structure support. It has broken structure already. You can see the IBOS has been broken. This is a valid break of structure because the body engulfs the low, this line, the lower low, basically. The body engulfs it. When it engulfs it, that's a valid break of structure. That is inverted break of structure. That is just downtrend, indicating the market is going downtrend. So projecting here our first entry, the first exit, then these are last exit. So the market might break it or not. Let's just wait for it. So you can just follow the market through. Today is June 6, 7:35. So you can just project the chart from here and look at what happened aftermath from there. Okay. See you. If you have any question, ask and I'll respond to them. Thank you, and don't forget to trade smartly. If you want to get access to the tool, join our community, ask questions, or go to cryptosmartanalyst.com. The URL is going to be in the description of this video. Okay, do have an amazing day, and see you next time.